Hey there, Lincoln here from bullacademy.org. Tonight I have a quick update for you relating to Airbnb's upcoming IPO, which was previously reported to be coming in December of this year. About 6 hours ago, Bloomberg News reported that Airbnb's board of directors have approved a 2-to-1 share split for Airbnb shares. Let's hop into the report and then I'll let you know why this is important for the upcoming Airbnb IPO for retail investors. And of course, if you enjoyed this video, like the video below, subscribe to the channel, hit the notification bell, and comment below what your thoughts are on Airbnb's upcoming IPO and this news. Let's hop in. So as I said, Bloomberg has reported that Airbnb told its shareholders group that the board has approved a share split. And I've taken the time to highlight the important news in this report. So Airbnb is doing a 2-for-1 split of their shares, and all this does is double the number of shares outstanding for the company. It does not increase the value of the company, and it does not decrease the value of the company. But Bloomberg also reports that the shares of the company have increased in value by 10.4% based on the IRS valuation system. So typically the valuation that the IRS gives to a company on the private market is not accepted by private investors on the market. Instead, these venture capital firms usually go by their own valuation system, which is based on the market values that they negotiate with the entrepreneurs themselves, such as the CEOs and the CFOs of these companies. And in this case, that would be Brian Chesky, the CEO of Airbnb. So again, these valuations are based solely on the IRS's valuation system, and they're not generally accepted by venture capital firms. So they are just representative of what the IRS believes these companies are worth. So with that said, we can still see the effects of this 2-for-1 stock split on the private market for Airbnb. Before the split, Airbnb shares were valued at $69.76 per share. That was as of September 30th. But now they're valued at $34 per share since they've been split in half. And here Bloomberg is saying that Airbnb's valuation increase coincides with the rebounding Airbnb bookings over the summer, since the company saw a huge plunge in the spring in bookings, due to of course the current pandemic. And as we've covered in a previous video on this channel, Airbnb is seeking to raise $3 billion in their IPO later this year, in potentially December of 2020. And what this share split means for that IPO, for public investors like me and you, this means that the company's shares will be worth half what they would have been if this share split would not have taken place. So that's a good thing, right? That means that we can all invest at a lower price than what we would have had to if the share split did not happen. But of course, because of fractional shares, these stock splits usually don't mean anything. All they do is make it appear to be cheaper so that more people can think that they can afford it when they always could if they just use fractional shares. So it's mostly psychological. It makes the stock look more accessible for most investors who don't have a lot of money to throw at a single share of this company, so they can invest in the company at a lower rate and think that they have more shares than they actually do. But again, it's just psychological. It doesn't change the valuation of the company up or down. And here Bloomberg is just saying that Airbnb has bounced back quicker than expected from the pandemic's lows. And that's a good thing, right? We want to see Airbnb bounce back and recover from this pandemic and see if and show us that they can continue to be a prosperous business throughout this downturn in the market. Again, as we reported before, Airbnb was last valued at $18 billion in April when they raised $2 billion in debt. And of course, that was down from their previous valuation of $31 billion in 2017. And the reason that happened was, of course, they were raising debt and their company wasn't doing very well during the pandemic. So it's great news that the company is bouncing back and they're doing a share split, because that means that the company seems to be going forward with their IPO, and hopefully it will be in December of this year. So that's all for now. There's not really much more to say on this report. It's just that it's great to see the company going forward with their IPO plans. And this seems to be just another step in that direction. So I'm looking forward to Airbnb's IPO. Like I said before, I am bullish on this company and I plan to invest once they go public. So if you're interested in Airbnb and you're interested in investing in this company, then subscribe to the channel, because we're going to continue to cover Airbnb's updates on their IPO. And as soon as we get more news on the IPO, I'll let you know here. So if you enjoyed this video, like the video below, subscribe to the channel, hit the notification bell, and comment below what your thoughts are on Airbnb and their IPO. And let me know if you're interested in investing in the company too. And of course, if you want to help the channel grow, then join our Patreon community at patreon.bullacademy.org. For just $12 a month, you'll get more access to me. You'll be able to get direct answers to your investing questions from me and the community members. And you'll get more frequent updates on my portfolio, such as which companies I'm investing in and which SPACs and stocks I'm watching, so that you can know before anybody else does. So if you're interested in all of that, join us again at patreon.bullacademy.org. I'm Lincoln with bullacademy.org. Thank you again and have a great night.